The Minority Market. Episode 23. Why Price Doesn't Equal Value. Most people entering the stock market assume that the current price of a stock represents its true worth. If a stock is trading at a high price, they believe it must be valuable. If it is cheap, they assume it is low quality. This assumption is one of the most dangerous mistakes beginners make. Price is simply what the market is willing to pay at a given moment. Value is what the underlying business is actually worth based on its ability to generate cash, grow sustainably, and survive over time. Confusing these two ideas is the reason many investors buy at the top and sell at the bottom. Price is driven by emotions, expectations, and short-term behavior. Fear, greed, news headlines, rumors, and crowd psychology constantly push prices away from reality. When markets are optimistic, prices rise far above what businesses truly deserve. When fear dominates, prices fall below their actual long-term potential. The minority understands that price is noisy and emotional, while value is slow, fundamental, and grounded in business reality. Imagine two shops on the same street. One shop has loyal customers, strong sales, and steady profits. The other struggles to survive, barely covering expenses. Now imagine that the struggling shop is suddenly hyped on social media and people start paying a premium to buy it, while the strong shop is ignored. The price people are willing to pay for each shop changes, but the underlying business reality does not change instantly. This is exactly how markets behave. Hype can inflate prices and fear can crush them, but value remains anchored to fundamentals. Another reason price and value differ is expectations. Markets do not just price what a company is today, they price what people believe it will become. If expectations are extremely high, even good performance can lead to falling prices because reality fails to exceed hope. On the other hand, when expectations are low, even small improvements can cause prices to rise sharply. The minority does not blindly chase rising prices. Instead, they observe expectations and ask whether the current price already assumes perfection or leaves room for growth. Short-term traders often focus only on price movement. They look for patterns, momentum, or quick gains. While this can work in certain conditions, it becomes dangerous when price is treated as truth. Without understanding value, traders become emotionally attached to charts and forget the business behind the ticker symbol. The minority keeps perspective. Even when using technical tools, they remember that behind every price movement is a real company with assets, liabilities, customers, and long-term survival challenges. Another critical concept is that value changes slowly, while price changes quickly. A company does not double its real worth overnight, but its stock price can double in weeks due to speculation or hype. Similarly, a strong business does not become worthless in a few bad days, but panic selling can destroy its stock price temporarily. This difference in speed creates opportunity for those who are patient and disciplined. The minority waits for moments when price and value are far apart and avoids chasing moves driven by emotion. Beginners often ask, if price does not equal value, how do I know what value is? The answer is not about finding perfect numbers. It is about understanding business quality, competitive advantage, financial health, management integrity, and long-term sustainability. You do not need to be a mathematician. You need to think like an owner. Would you buy this business if the stock market did not exist? Would you hold it during difficult times? Would you trust its future? These questions bring you closer to value than any short-term indicator. Another trap is comparing stock prices directly. People say, this stock is cheap because it is only 50 rupees, and that stock is expensive because it is 2,000 rupees. This comparison is meaningless. Price alone tells you nothing. What matters is how much of the business you are buying for that price and what that business can produce in the future. A low-price stock can be extremely expensive in terms of value, and a high-price stock can be undervalued depending on fundamentals. The minority also understands that value investing is not about perfection. You will never buy exactly at the bottom or sell exactly at the top. The goal is not precision. The goal is margin of safety. This means buying when price is reasonably below estimated value, giving yourself room for error. This mindset reduces emotional stress and increases long-term survival. When you know you are buying value instead of hype, short-term fluctuations become less frightening. Price-focused thinking creates emotional trading. Value-focused thinking creates strategic behavior. When you chase price, you become reactive. When you understand value, you become patient. When you follow the crowd, you become vulnerable. When you think independently, you build resilience. This is one of the most important mindset shifts on the journey from majority behavior to minority thinking. Here is a simple exercise. The next time you look at a stock chart, stop focusing on the line moving up and down. Ask yourself 3 questions. What does this company actually do? How does it make money? And what could realistically affect its business over the next 5 years? This practice trains your mind to move away from emotional price watching and toward rational value thinking. Over time, you will notice a powerful change. You will stop feeling the urge to chase every breakout. You will stop panicking during temporary drops. You will begin to see the market as a place of opportunity rather than chaos. This does not mean you will avoid losses completely. It means your decisions will be grounded in logic rather than impulse. Remember, the market rewards patience, preparation, and perspective. Price is what you pay. Value is what you get. The majority focuses on what they see on the screen. The minority focuses on what exists behind the screen. If you can internalize this difference, you are already building a foundation that most participants never develop. As you continue this journey with the minority market, keep reminding yourself that real wealth is built through understanding, not excitement. When you stop confusing price with value, you stop playing the market's emotional game and start building long-term advantage.